The quarter at a consolidated level, net revenue up to 63,800 crores from 46,000 crores. EBITDA percentage came in higher at 16.5 from 13.3 same period last year. Profit after tax 4,805 crores for the quarter, up from 1,600 crores. Similarly, you will see in the 9 monthly performance this year, net revenue up from 1,67,000 crores, up from last year's 9 months of 1,32,000 crores. EBITDA margin again higher by about 2 percentage points at 15.9, and profit after tax 10,000 crores, up from 5,900 crores same 9 months period last year. Our consolidated level net automotive debt to equity is at 0.19:1, reflecting a strong balance sheet and solid liquidity position. However, in Tata Motors standalone, the performance has been quite down for one more quarter. Net revenue down to 7,700 crores from 10,630 crores. EBITDA margin was negative at 4.3%, down from positive 2.2% last year for the 3 months period. Profit after tax stood at 1,251 crores. I'll explain this in due course, up from negative of 458 crores same period last year. And similar performance between the two corresponding years for the 9 months period as well. Profit in this quarter included certain divestments that we have done in our subsidiary companies overseas, which we divested in favor of a wholly owned subsidiary in Singapore. Since it's a divestment of an investment in subsidiary companies, this divestment profit has been accounted in Tata Motors standalone as profit on sale of investments, which has turned the performance for the quarter and for the 9 months period into a more robust performance. 9 months performance also includes dividends we received from Jaguar Land Rover in July of this year. At the standalone level, net debt equity ratio is high at 0.80:1. Jaguar Land Rover, just to caution, as usual, we report Jaguar Land Rover figures on a standalone basis under IFRS accounting standards. Jaguar Land Rover net revenue up at 5.3 billion pounds, up from 3.8 billion pounds in the 3 months period last year. EBITDA percentage came in at 17.9% compared to 14% in the same period last year, and profit after tax at 619 million pounds for the quarter compared to 296. Indeed, one more quarter of outstanding performance in JLR. Similarly, you will see in 9 months period, revenue at 14 billion pounds, up from 10 billion pounds. EBITDA percentage 17.5, up by about 3 percentage points for the night compared to the 9 months period last year. Profit after tax at 1.4 billion pounds for the 9 months period, nearly double from 800 million pounds for the 9 months last year. Net debt is negative in JLR, and therefore net debt equity is negative 0.15, reflecting an outstanding strong balance sheet and huge liquidity. In terms of the India business highlights, we're all familiar with the prolonged slowdown in the overall macroeconomic activity, very subdued infrastructure investments, and a very tight financing environment and weak operating economics for the transporters. All of this affected the demand for our commercial vehicles quite significantly, and they continue to do so in this quarter. Across the industry, including for Tata Motors, marketing spends continue to remain high, adding pressure on the bottom line. From Tata Motors' point of view, several value-added services and new product launches led to an increase in our market share by 200 basis points in Q3 compared to the last year. And similarly, for the 9 months period, there was a 40 basis points increase in market share. In the small commercial vehicle segment, and in both cargo and passenger small commercial vehicles, our market share continues to be very strong, about 70%. We have launched quite a few new services with several new features like Tata Fleetman services. The macro environment, weak consumer sentiments, sharp rise in diesel and other fuel prices, petrol prices, lending rates, and high inflation restricting the discretionary spend by families affected the passenger car demand in general. From Tata Motors' point of view, we launched a series of E-Max passenger vehicles adding to our CNG portfolio with Nano E-Max, Indica and Indigo. We are also beginning to address other global markets, launched the Tata Ariya in South Africa, and Tata Xenon was released for sale in Australia. We continue to focus on customer requirements and upgrade our products and value-added services and solutions and our dealer effectiveness. In terms of numbers, in commercial vehicles, Q3 of FY14, we reported sale of 86,000 vehicles, down 15% from 101,000 vehicles in the same period last year, in the immediately preceding year, and down from 138,000 vehicles in the same period last year. Overall, in commercial vehicles, our market share stood at 55.8% for the 9 months period. In passenger vehicles, the volumes came in at 34,800 cars, down from 35,000 marginally from 35,411 in the immediately preceding quarter, and down from 53,000 cars in the same period last year. Moving on to Jaguar Land Rover performance. Wholesale and retail volumes for the quarter stood at 116,000 and 112,000 respectively. EBITDA, as I reported, margin of 17.9%, up from 422 million from Q3 of last year. This is reflecting the overall volume increase, richer product mix supported by launch of newer vehicles like Range Rover Sport, new Range Rover and Jaguar F-Type, a richer geographic mix with increased volumes, particularly in emerging markets. Free cash flow for the quarter stood at 234 million and for the 9 months period 323 million. And this free cash flow is post significant investments in capital expenditure and product development in JLR. This capital expenditure stood at 788 million for the quarter and 2 billion for the 9 months period. Strong balance sheet, which I already talked about earlier. Further, we also issued 700 million bond offering from JLR, which is due at 4.125%, which is due in 2018. And after the end of the quarter in January 2014, Jaguar Land Rover also issued a further 400 million bond offering at a very attractive pricing of 5%, which is due in 2022. Coinciding with the second bond issue, we have also made a tender offer to buy back one of our existing bonds, which were issued about 3 years ago at a relatively higher cost. And if this buyback is successfully concluded, which we expect in the next couple of months, it will have significant positive impact on JLR's interest costs. During the quarter, we also entered into an agreement with state authorities in Brazil to set up a new manufacturing facility for some of our cars. You are familiar with the pie chart, which is the global market pie distribution for Jaguar Land Rover. In Q3 of FY14, North America represented 19.1% of our total sales, UK about 14%, Europe about 20%. China region came in strong at 24.8%, other overseas markets 17.6%, and APAC 4.9%. Looking ahead, we continue to see depressed market conditions in India for both commercial vehicles as well as passenger vehicle business. Control on governmental spend and government expenditure to meet the fiscal deficit targets will continue to constrain growth in the rest of this financial year, another couple of months, and perhaps may well into the next financial year. We see competitive intensity in both the segments continue to remain high. There may be some positive momentum in terms of bus volumes with the launch of the JNN URM Phase 2 orders. And from the company point of view, launch of new products in our Prima range, Ultra range, and product refreshes and variants in small commercial vehicles and pickups we'll see as maintaining our strong presence in this segment going into the future. We'll of course, focus on further exploiting the export potential for our products. In passenger vehicles, we'll continue to remain focused on a customer-focused strategy, which is based on 4 pillars, which I have shared with you earlier. Intense product focus, manufacturing practices to enhance quality, enrich customer purchase and service experience. Some of the recent launches which we expect will drive growth into the future will be the Nano Twist and the Vista VTEC. We do have some upcoming product launches in the passenger vehicle also. Some of you may have seen, we unveiled them in the auto show recently, the Tata Bolt and the Tata Zest. We have recently launched a new powertrain in petrol engines, Wwatch. In the passenger vehicles also, we will continue to focus on availing export opportunities. Jaguar Land Rover, we hope to build the sales momentum further with the new products which have been successfully and very well received in the markets. F-Type Coupe and other new derivatives are planned. We will continue to invest heavily in new product technologies and to, in parallel, build up our manufacturing capacities. Free cash flow after investment in the region of 2.75 billion has continued to be stronger than expected. It is the capital expenditure of 2.75 billion. Our free cash flow has been stronger than we had expected earlier this year, and we expect it to be positive for the whole year. Next year, with the product pipeline we have and the plans we have for growth, we expect our capital expenditure for the year next year will increase further to about 3.5 to 3.75 billion, which is reflecting our strong momentum for growth, the opportunities that we see.